Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for our monthly segment, we have Scott Melker back, cryptocurrency trader. We better know him as the Wolf of all Streets. Scott, it's great to see you as always. Welcome back to Trade Talks.
Thank you so much for having me back again.
And Scott, it was a busy week for crypto traders across. The big news this week was the bill that did not get passed. Give us some background and what you're looking for next.
I've made the argument that the Senate infrastructure bill was the biggest advertisement in history for Bitcoin, and an unexpected one at that. Obviously, Bitcoin has very little to do with the infrastructure. It was a simple one-liner basically on cryptocurrency that outraged the community and caused the bill basically to be frozen for 3 or 4 days as senators debated it. Of course, it did not pass, but it still has to go through the House, potentially the courts, and wouldn't even be enacted until 2023. So for me, it's a non-issue. It's just incredible in my mind to see the United States Senate debating cryptocurrency in front of the entire world. And honestly, the irony should not be lost in the fact that they're talking about printing basically $1.5 trillion for this bill, and in the same breath talking about Bitcoin, which is a hedge against that very behavior.
Right. And then, Scott, the other thing that you just said, too, is that, when you think about Bitcoin and infrastructure, Bitcoin really isn't the infrastructure of how digital assets work, which is, I feel like there needs to be a little bit more education on legislators' part before we start talking about bills and so forth, or at least work more with the community to really understand, how this infrastructure is built in the digital asset end.
Sure. In my mind, this had nothing to do with infrastructure. It was simply a way to raise a bit more taxes on the cryptocurrency industry to try to give an excuse to pay for the infrastructure bill, right? It was an afterthought. It was something that was thrown in there to raise another 30 billion or so. And like I said, the cryptocurrency community was up in arms, and I don't think that they expected or intended that.
Do you expect anything, in the near term anyway, to come of this, or is it really until it reaches, the next level of debate?
Yeah, I think it's the next level of debate. I'm actually confident that after so many eyes were on this, that it will probably be rectified when it goes to the House, which is the next step. I think that now a lot of congressmen and congresswomen probably see this as an opportunity to get into the news cycle and to fix this very small error.
And then, Scott, we saw the recovery in Bitcoin, but also Ethereum's had quite the run. Is it because of Bitcoin, or is it a separate reason while it's continuing to do so well? Is it more of the DeFi story than anything else?
I think a rising tide lifts all boats. So that's certainly part of the story. Anytime Bitcoin rises, you see generally a positive impact on the rest of the market. But you and I have discussed this before. I'm extremely bullish on both assets, but probably think that Ethereum has more upside. I do think that the amount of total value locked in Ethereum for DeFi is absolutely astounding. The fact that the London hard fork was just put in place and we're seeing some deflationary aspects to Ethereum with EIP 1559. I just really think that Ethereum has absolutely everything going for it right now. And while Bitcoin has solidified that store of value digital gold narrative, I think that Ethereum is more akin to investing in the internet or Amazon extremely early.
And then, Scott, to wrap up here, anything else in the crypto space that we should be made aware of that you're paying attention to, the rest of the ecosystem is paying attention to in the near term?
Well, I think that it's just a matter of seeing a lot of the negative stories and FUD, as we like to call it, sort of disproven and becoming moot. The Chinese exodus and the miners and the environmental impact, all of those stories seem to come with the negative cycle in Bitcoin price and seem to be largely disappearing. In my mind, the things to be watching for the rest of the year would be a potential ETF or any more regulation coming down from the SEC. I think if we start to see more clarity from regulators, and certainly an ETF being approved, that would really open the floodgates to a wall of money from endowments and, the really sovereign wealth funds and all of the huge money that's probably looking at the space but waiting on the sidelines.
Interesting. As you know, Grayscale just hired its first global head of ETFs in the industry, veteran Dave LaBelle. So it will be interesting to see how Bitcoin ETF evolves in the near term. Great to see you as always, Scott. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.